Welcome. In this video, did Zbcn coin trend change? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we take a look at the chart, we can see that there is a distinct falling trend line that has been putting a lot of pressure on the price in the past. This falling trend line has caused the price to make several attempts to make upward moves, only to be repeatedly rejected and fall to lower levels each time. However, over time, the pressure against this trend line accumulated, and finally, with the determination of buyers, the price managed to break this prolonged downtrend. In trend breakouts, especially when a strong falling trend line is broken, prices often make a retracement move immediately after the breakout in the first place. This technical pattern is called a retest. This is exactly what is happening right now. After breaking above this trend line, which previously served as a strong resistance, the price is now testing this broken level by bouncing back again. In other words, after making an upward move, the price returns to the level it broke and tries to find support there. This retest process is actually an extremely important and necessary step for the price to prepare for a healthy rise. Because before starting a new uptrend, the market needs to confirm this breakout. If the price manages to hold above the falling trend line it broke, this technically signals the start of a new bullish wave. That is, buyers will continue to defend this area, and the price will gain upward momentum more comfortably as the seller's pressure is broken. At the moment, the price is trying to hold just above this broken trend line, almost gathering strength. Such retests can last for a few hours, sometimes a few days. But the important thing is that during this time, the price doesn't fall below the broken trend line and clearly shows that it has found support in this area. If the price manages to stay above this support and there is enough buying volume, the uptrend is expected to continue in a much healthier and stronger manner. In addition, such trend breakout and retest structures provide traders with very good buying opportunities. This is because it allows them to enter the market at a point when the price is just about to start a new uptrend. From this perspective, the current technical picture is positive in the short term. In particular, if there is an increase in volume in the rises following the retest, this will strengthen the possibility of the price moving to higher levels in the coming days. In short, this falling trend line, which has pressured the price downwards for a long time in the past, has now been breached. The current retest is taking place to confirm whether the breakout is healthy or not. If this confirmation is successful, that is, if the price makes another upward move from this area, then we may see the start of a much stronger and more stable uptrend in the coming period, but we need to look not only at trends, but also at other metrics. Stay tuned. When we look at price movements from a broader perspective within the framework of Elliott wave theory, we see that we are currently in the formation phase of the third wave, which is evident on the chart. As is well known, Elliott wave theory allows price movements in the markets to be analyzed through wave structures, and the third wave in particular is considered to be the strongest and most voluminous wave of this structure. In other words, the phase when the buyer pressure among market participants is the most intense, the momentum of the trend increases the most, and the prices climb the fastest usually occurs during the third wave. In terms of the targets of this third wave that the price is currently in, we see that the Fibonacci extension levels, which are often used in technical analysis, play an important role. Specifically, in the third wave, the price is expected to rise to the Fibonacci 1618 level as a minimum. This level is considered the ideal third wave target in technical analysis because third waves are usually at least 161% larger than the first wave. However, in case of strong momentum and high buying interest in the markets, this rise may not be limited to the 1618 level. In this context, it is also quite possible that the price action could continue up to the 272 Fibonacci extension. The 272 level is usually targeted in scenarios where the third wave is extremely strong, with buyers completely dominating the market. If the market participants continue to enthusiastically support the current uptrend and the price breaks through important resistance levels one after another to form new highs, then it may even be possible to extend the move to the 3272 Fibonacci extension. To summarize, the potential target areas for the price in the third wave are 1618, then 2272, and finally 3272. These levels are like a roadmap for technical analysts and experienced traders. Because when the price reaches these extension points, it also gives us valuable information about the strength of the trend. If the price stops only at 1618 and there is a sharp sell-off, it could be a sign that the upside may be limited. However, Reaching more distant targets like 2,272 or 3,272 would be a clear indication that the market is in an extremely strong and healthy uptrend. It should also be emphasized that during the third wave, the volume in the market usually increases significantly. This indicates that the price has not only crossed a technical level, but also that a large investor base is supporting the move. So it's important not only to focus on price levels, but also to monitor the volume dynamics underlying the move. If the price shows a steady increase in trading volume as it moves towards these Fibonacci targets, it's a sign that the uptrend could be extremely healthy and lasting. As a result, when we analyze price movements through the Elliott wave theory, we can clearly see that we are currently in the third wave. And in a technical sense, we are in a process where the price can advance to at least 1,618 levels, then 2,272 with a strong momentum, and perhaps up to 3,272 levels in a more optimistic scenario. Therefore, it is very important for investors to carefully follow both technical levels and market dynamics. The third wave will be the longest wave. Please act knowing this. When we look at the RSI indicator from a broader perspective, we can see that an uptrend structure has formed, which is now clearly defined on the chart. This uptrend can be considered as an important sign that the overall direction of the RSI is upward, and that market participants are, on average, more willing to buy. Such uptrends, which usually form on the RSI, are a strong indication that the uptrend in the market is not yet exhausted, and that buyers continue to support the market. At the moment, the RSI value is moving slightly above this rising trend line that we have identified. However, as time progresses and prices continue their natural fluctuations, it is very possible that the RSI may retrace back towards this rising support line. In the coming days or weeks, the RSI can be expected to touch this trend line again. Such contacts are of great importance for technical analysis. This is because they usually coincide with a moment when prices are approaching a critical support zone and the potential for a new upside reaction arises. If the RSI makes a pullback towards this rising trend line at a later date, it is very likely that buyers will re-engage and turn the RSI upwards. In technical analysis, the fact that the RSI bounces off such a support line is often considered one of the leading signals that prices will complete a downward correction and begin a bullish move again. This is because this rebound in the RSI indicates that buyer power has been reactivated and can add a new bullish momentum to the market. Therefore, it will be a critical development for technical analysts if the RSI approaches this rising trend line in the coming periods. If this contact occurs, and the RSI makes an upward reversal from here, it's likely that prices will simultaneously start a new upward move, taking strength from the support zones. In such a scenario, there could be buying opportunities for traders, and the market could re-enter a strong uptrend. Especially with the support of the RSI from this trend line, the price is expected to react upwards. Often, such technical structures can lead not only to small price reactions, but sometimes to the start of new medium-term trends. This is because reactions from support on important momentum indicators, such as the RSI, often signal that market psychology has turned positive again, and investors are starting to take risks again. As a result, this rising trend structure on the RSI suggests that the market structure has not yet deteriorated, and that possible pullbacks in prices may create new buying opportunities. In the future, if the RSI approaches this support line again and successfully bounces off it, it is quite possible that not only the RSI, but also the price will start a new bullish wave. Therefore, it will be extremely important to carefully follow the movements of the RSI around this critical trend line in the coming period, both in terms of short-term and medium-term trading. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.